Well, hi everyone. Welcome to the Buffett and Beyond Research Saturday ETF report, and we are talking about ETF top stocks with enhanced income. In other words, that means hedging, taking the hedges off and putting them back on. With our top stocks, brings in 31% in the past 5 months. Now we're talking, and we're recording this on January 3rd, 2025, but we're putting it out January 4th, 2025. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let us look at the returns, the one-year returns of our sector all-stars. So in other words, we look at the ETFs and we see which ones are outperforming the S&P 500. And then from those ETFs, we pick some of the best stocks in that particular ETF so that we get a diversified portfolio. And of course, we use the clean surplus methodology, which is in the book, and I can send you a free copy of the ETF book if you want. Just go to buffettandbeyond.com down at the bottom here and ask for the 30-day free trial, and you got it, folks. Anyway, here we are with the S&P up 23.3% for the year. This portfolio is up 36.4%. And here are the new stocks that we are adding to this portfolio this year. And of course, if you're not subscribed, you can't see which stocks these are. But I can tell you they're Arista Networks, they're CrowdStrike, GoDaddy, Fairhouse Corporation, and a host of other stocks that we've had for this year. And we'll see how it goes, folks, because this portfolio always outperforms. Now let's go to the NASDAQ 100 stocks, and we pick about a dozen of stocks using the clean surplus methodology out of the NASDAQ 100, and this portfolio returned for 2024 47.2%. Folks, we really try to get it above 50%, and we were above 50% just about 2 weeks ago, just a little less than 51%, and we closed the year out up 47.2%. And folks, these are the stocks you've all heard of. It's not like they're little gems hidden under a rock someplace because we don't know how to analyze those. We are in stocks that everybody has, or most people have heard of, and therefore we just know how to pick the best stocks out of any group of stocks, and it works almost 100% of the time. Now, let's go with this portfolio where we are, when the indicators turn down, we go short some of the stocks. We're always long our stocks, the best stocks, and in fact, most of them are in the QQQ portfolio, are 12 stocks. So we buy those stocks with long all the time. Then if the market starts to turn down using our indicators, which are in a daily letters, so just go to our site and sign up for the 1 month subscription, you'll get the daily letters. But anyway, this portfolio goes down, we go short either the options on the QQQs or the SQQQ, which is an inverse hedge that we use. So when the QQQs go down, the SQQQs go up. In other words, the S stands for short. So we started this portfolio, and then when the market seems to bottom out, then we turn around and we take that money that we made from the short position and go long, either with options or just the QQQs. We just buy the QQQs, so we don't have to buy the stocks again. And this portfolio that we're testing that with, because we've been using options for portfolio protection for over 40 years now, so it's not like it's something new to us. It's just that what if we combine it with our long portfolio, but keep our portfolio long all the time so we don't have to go around buying and selling stocks every 5 minutes. So this is either we are totally long all the time, the stocks, and then we will go short at certain times if the market seems to be going down, and then we'll go back long with that money, and we'll get into the QQQs, or sometimes even the TQQQs, which are a multiple of the QQQs. Anyway, bottom line is that for 5 months, we returned 31.8%. And again, we're mostly long those stocks. From the stocks, we made 66% of that 31%. And with the options in the portfolio that we use going down and going up, we made 33%. So that's how we were able to get 31% in 5 months. Actually, it was a little over 5 months. It's about 5 months and a couple of days. But 31.8% comes out to about 5.3% per month, which is pretty good. And we're in good stocks, folks. So even if we go short with one of our hedges and we're wrong, we are still long the stocks, and the long stocks will go up faster than our hedges will decline in value, just in case the market goes up against our hedges. So we are long all the time, and then sometimes we go extra short using other alternatives, not the stocks, because we're always long those stocks. We'll go short, and then when the market turns around, we'll go long with that amount of money. And we like to use the options on the QQQs, which are pretty liquid. So we like that. That's something that's coming very, very soon. In fact, this is a real portfolio that we're doing it with. As you can see, money was put in, money was taken out. So it's like your portfolio, folks. Money goes in and money comes out. Now, let's go to the QQQs. This is as of Friday, and we can see that the market seemed to have held this 50-day moving average. So the QQQs are the NASDAQ 100. So we held the 50-day moving average in here and bounced off it, and you can't see, but right in here is where this market closed for the day, and this was on Thursday, and it was right in line with where it closed about 2 weeks ago. And then all of a sudden Friday, and I'm talking about this as the market is still open on Friday with about an hour and a half to go, and you can see now we're approaching that 20-day moving average. The key is that this line did not fall very much further than this line, and it looks like the intermediate term indicator wants to point up. Now, let's go to the transportation, which is so important because the transportation was, well, look at it. It was getting killed in here. And this is while the Dow was going down and have its own hissy fit in there. But we held this is the 200-day moving average right in here, and it held that 200-day moving average 4 times in here. So it came down, it hit it, went below it, came back up above it, rose a couple of days, came back down to test, a couple of tests in here, and then Thursday was up, and that gave us an indication that this would hold, and Friday, as I'm recording this, is up. This line up here gave us a bullish divergence. This is a very short-term indicator, but as the market went down or held this line in here, held straight, this indicator made a higher low right in here. That gave us a bullish signal. And down here, this oversold intermediate term indicator is just starting to point up. It's got to cross this red line, and then we might use some more options going up right now. So this is very, very important, and we probably will not see it by the end of the day, but Monday or Tuesday will be very, very important days. Now let's go to the technology ETF. We see the same type of thing in here, just like we did with the QQQs, and we're holding that 50-day moving average and approaching the 20-day moving average up here. And then with the XSD, which we're using as a semiconductors, the exact same thing, except we are above the 20-day moving average. So in other words, we came down, we tested the 50-day moving average. Now we are above the 20-day moving average. Same bullish divergence in here, very, very nice. And then down here, it really looks like it wants to turn up. But of course, it did back here too. But this time, we think we are in a situation. We don't know what the volume is today, right in here, this green line, because the market has to close for us to get the daily volume, and we'll see how that works. It'll be this green line in here, but we'll know Monday. And then with the S&P 500, we're seeing the same type of thing. We held this line right in here twice very, very nicely. And in here, Thursday kind of gave us the sign, because the market, this is the length of the market, how much the market moved. This right in here to the left, this little line to the left where it opened. Then it fell all the way down to test this line in here. And then this is where it finally closed. So it looked like it tested it. And then Friday morning, it started to open fairly strong, and then it got weak, and then it went strong again, and we're approaching that 50-day moving average. Hopefully, we're turning up down here. This is the intermediate term signal and gives us a better signal. Right up here, this part is very, very short term. This is a intermediate term indicator, and it's very, very important. So, folks, we had a crazy, crazy start to the new year, and the Santa Claus rally, really only one day out of 4 was it positive. And so I don't even know if you could call it a rally, but it was a Santa Claus effect, which lasts 2 days into the new year. So, folks, we had a tumultuous week. Hopefully, this is the start of a rally, and it looks like it is, but we'll know more on Monday and Tuesday. Meanwhile, go out, walk on this beach, walk on the golf course. Be safe. Have a very, very happy new year. And, folks, we'll see you right back here in a couple of days.